to another land, somewhere in the sun. To somewhere in the sun. There's a tall sea on the coast and the sailors I see. Back your rails, horse your sails, ride the wind. There's a tall sea on the coast and the sailors I see. Cause I was shooting, spank your rails, horse your sails, ride the wind. Spend up, sipping on spots of water. I came back with it. All my friends down in the town. Wouldn't take much for me to up and run to your land, somewhere in the sun. Somewhere, somewhere. It's time to change. Time for that same old word, same old life, same old tricks, and the same old day. These precious days roll in like rain. I got boards to pay, I got plays to do, charts to pay, I got scenes to sell. I'm gonna build me a boat where these two hands should be a better from a noble plan. Let the chips fall where they will. Stop, got folks to do. Stay just like wings. It can make them sing songs of life, songs of hope, songs of keep your dream for the home. I'm gonna build home where these two hands should be a better from a noble plan. Let the chips fall where they got to be. Yeah. Sure, distant shore. That's where I'm headed for. I got the stars that got my way. Sailing to build me a boat with these two hands to be a better from the noble land. Let the chips fall where they will. Cause I'm gonna build me a boat with these two hands to be a better from the noble land. Let the chips fall where they will. Cause I got folks to live. I got folks to live. Got folks to live. Alan Jackson, Jackie West Hotel. We got folks to build. All we can do is go to Margaritaville now, folks.
Good morning, everybody. Happy Friday. Starting off pretty decent there. Hey, we'll get started here in about 8 minutes. Take some time to look over our prep screen and what we're talking about and what we're looking to do as the session gets underway. A lot of good things coming out. Fed is starting to crumble a little bit. A lot of new stuff out there that's going to be helping us find that bear trap. Hopefully, get a nice entry off of that. Anyways, look over our prep and get ready for a spectacular morning session.
There enough. You pray to God, see the lights. Maybe now, 17 times. You can't go loud. Can see the baby. So, all that get real.
All right, getting closer to the open. I know, I'm waiting for it too. 3 minutes.
Joker, I Billy had a dance long too, but he's a heroist from the Himalaya. The Johnson City, Tennessee. Yeah, get the phone, bring it for some. I hear my lady calling my name, and I know that she's the only. At least I will die. So.
Sorry about that. Had the wrong prep screen up there. Yeah, we'll get started anyways. We do have some and happy Friday, everybody. Market's on sale. It's always kind of scary to buy the dip, especially when the market is down this low, but you know, there's a lot of positive things going on out there. Let me get my self organized and out there. There we go. All right, let me first let's gonna come out here and check the news. Once the non-farm payrolls came out, a lot of Fed started barking and um let's see, let's read. I find this Financial Juice is just an incredible website. If you've ever been exposed to having a Bloomberg terminal, this is the next closest thing to it at a fraction of the cost. Now, I'm not an affiliate or part of it but what an amazing place, a resource for a lot of good news. Um, seem like I can scroll back any further than that for right now. But there's the Fed chairman are also showing a divide between what Powell is thinking and they're calling for Fed or calling for more rate cuts coming up faster than possible. That's going to add fuel to a potential move to the upside. Oh, the other thing I want to point out is that the dollar just collapsed. I mean, it just crashed here. So did the 10 and the 2-year yields. Okay. Just plummeted. Okay. Which sent all of our FX markets straight up. It is important to understand, how the dollar, the 10 and the 2-year yield are correlated. Look, Swiss franc, boom. Yeah, I didn't have an entry on the Swiss franc. I did on the Canadian dollar, was trading that yesterday. But it wasn't until this morning we got a big move. We are still in the Japanese yen. This was a yen trade that we took yesterday. Or actually, I took last night after information came out. Well, after we had the market drop, okay, yesterday ahead of yeah. Anyways, this was a trade setup that was posted out there for us. I got into it last night. Had a relatively really tight stop on it for the overnight session, and wow, market just took off from there. So I am about ready to take profit on this one. Um, Not because it's arrived at a supply zone, but it's a good way to start off a Friday. Okay, we even got a fib number, 1300. There we go. Let's just go ahead and grab that so I'm not distracted by it. There's going to be a lot more opportunities coming up
Order filled.
in our session here. To start off looking at the equity indexes, notice that the Globex range, okay, Globex high, Globex low, okay. Oh, okay. End of day evaluations. Okay, we do have some um, evaluation accounts, prop accounts that we're going to give away. We got 3 of them today. Compliments of Elite Trader Funding. Okay, EliteTraderFunding.com. We'll go into that just in a little bit later, but we have 3 end of day evaluations, the coupon codes. Get ready. It's going to be a good session. Now, as we start off with the S&P, we have the Globex range, and this is something that and I'm going to talk about this because it helps us prepare. When we make reference to our pre-market screen, okay, all the Globex range are wide. So what does wide mean? Well, when the Globex range is greater than 70% of the daily ATR, it's wide range, okay? Well, we're greater than 100% right now for the Globex range. And this sets up the bull and bear trap. Okay. Now the bull bear trap is a great trading strategy because if the market does come down and hit the bear trap, which we got 62.66 on the S&P, 62.40. Okay. With the S&P being down already 63 points in the pre-market, it looks pretty ugly to somebody that does not do a pre-market prep. Okay, Amazon dropping, Goldman Sachs dropping. Oh man, it looks blood in the street, doesn't it? Okay, but notice the light volume. Lighter volume as price is dropping. Okay, so when you start putting these pieces together, you start formulating, well, what's really happening is the market looks extremely bearish, but it's kind of going down on light volume. So let's see, are futures oversold relative to the cash market? Well, we got 1, 2, 3, 4 Dow stocks that are up over 94 cents, and we have 14 that are negative. Okay, so if you net the result, that gives us with 10 negative. If we multiply that by 2, we get a value of 40. I'm sorry, excuse me, let me 10 times, oh, we got 20. Okay. Negative 20. Cash equals negative 20 right now on light volume. Futures are trading at negative 64. S&P futures are oversold, trading at a discount, 40 points relative to cash. So if price drops into that bear trap area, futures are going to be extremely oversold, trading at a discount relative to the cash market. Remember, futures are all a derivative instrument, okay? Some of these things we point out in our pre-market routine, okay? Here, all futures are derivative. They follow the product for a future purchase or sale, okay? So if the stocks are not selling off And the stocks are showing that the cash value is way above where the futures are trading. That's futures trading at a discount. An opportunity to see when price intersects with the demand zone to get a buying opportunity. Okay. We do have some more economic reports coming out. PMI comes out at 9:45, 15 minutes after the market opens. ISM, construction spending, consumer sentiment. Okay. And then most of the stuff is out except for all of the grandstanding that President Trump will be doing as far as putting pressure on the Fed some more. Okay. Uh, anyways, let's jump back out to the charts. So what I'm expecting is some folks to step in and do some profit taking. Okay. They just saw a 1 to 2% drop. Well, let's just measure this here. From this last high down, let's see, they've got the trend line. Yeah, 2.67. Now, for over 15 years now, prior to an FOMC meeting, market tends to go up about 3 to 4%. Okay. Now, that was with the prior administration. Okay. Now, in with this new administration, we're kind of going back to the 1.5, 2% is what I'm starting to notice with the FOMC meeting. It comes out every 6 weeks. The price tends to start rising 1.5, 2% prior to the FOMC meeting, and then goes down 1.5, 2% after the Fed meeting or announcement. Okay. So we're right there. Market's starting to get back into the groove of what it was doing in the previous Trump administration as far as how these markets have been and are controlled by the president, okay, our government. The other thing that we pointed out in the pre-market routine is don't fight what the president tells you. Every president for the last 20 plus years has come out and said it's a good time to buy stocks, and they give it a wink, wink, nod, nod. And then markets continue to go down so people don't believe them, okay? But don't fight what the president says, okay? And it doesn't matter whether you're a Democrat or Republican. That's not what this is about. Republican presidents and Democrat presidents all came out and said it's a good time to buy stocks. Go back and research it. Okay. I even have in my notes someplace here, I even have the way they said it from Biden to Obama to Bush and Trump. Okay. They all came out and said it's a good time to buy stocks, and the markets relentlessly started moving up. Okay. Now, my first attempt at that is I shorted every time that they said that. Okay, so I remember the experience, so I don't fight what they say anymore. Okay. Um, I think I got out way too soon on. Oh, it's still going. That's all right. Looks like we're running right up to sellers on the Japanese yen. Okay. Now, this is a very strong approach, and you can see over here that the volume is very light. Okay. So if you're up for it, a counter trend trade as price approaches, we're going to set this out there ahead of time. The dotted lines are a fair value gap inside of the leg base, and they've been uncannily accurate. Okay. A lot of exciting things coming out. We have been doing some additional studies on the zone, the leg base, having a fair value gap in there, but also noticing the location of that leg base zone within Bollinger Bands, Keltner channels, and just confirming many indicators at this area where the zone is created. Looking at picture perfect past trade setups, there's a lot of correlations to these areas. I'm going to set this trade up ahead of time and then get back to the equity indexes. Japanese yen, 0.68065. So we gotta go way up here. 0.6865. Okay.
Order filled.
Ah,
Order filled.
sometimes I. There we go. There we go. I got it set right now. Okay. So I have an order to short up at that level. And let's go back to the equity indexes. So this morning, as the market opens, we may see that people are just looking at the negative numbers. Okay. Apple did come out with earnings. Amazon came out with earnings as well, but still look at all that light volume. Okay. So if they're only looking at the number and not correlating that with a volume price, they're going to be like, oh, I need to sell. Okay. Get out. I've got a great profit. It's time to take profits. Okay. Now, if this was your market, you would want prices down a little bit further, right? In order to go long. Okay, so the bear trap is going to be something that we really need to pay attention to as the session opens and potential margin calls and people jumping out of their trades, so on. There's going to be a lot of drama around the open. Globex range is 80 points. Daily ATR, 56 points. This means that the Globex range is wide, like a stretched rubber band, okay? And if price gets down to the demand zone, okay? If you want to set this up ahead of time, I'm actually going to do this, okay? Let's come in and set this trade up 6262. I'm going to come in at 6263. Okay. Let's come down here. Let's make that 5. Okay, going long, 5 micro contracts, 6263. The order is placed. If I'm filled, I will place a protective stop loss at 6240 and let the market do its magic. Let's bring up the NQ. NQ, Globex range is 312 points. Okay. The daily ATR is 250. The Globex range is very wide. Okay. The bear trap is set. Let's set this one up. Bear trap at 22,919. Okay. I know this one looks way far away. It's like, it's never going to get there. But, you know, a lot of times it does. I'm going to come in there at 920. Nope. Oh, 5. Okay. 5 micros in there. That's one half of a mini contract. Okay. So anticipating a long entry, a bear trap strategy on the NQ. Okay. Dow. Globex range, 529 points. Daily ATR is 450 points. Okay. The Globex range is wide. The bear trap is in play. Notice the golden cross. When you go back and research, when that golden cross happens and price retraces back down to it, the uptrend just gets started. Okay. So a lot of talk about gold and stuff, of course, but that golden cross and price coming back to the 50 and 200 simple moving average daily chart implies that there's a lot more upside about to come into this market, especially if they start putting so much pressure on the Fed with all of these reports. Okay. Let's set this one up as well. Now, you don't have to take all of them, or if you do, just take one micro or something, based on your trading plan. Okay. Now, every trade does incur risk. Okay. I get it. Make sure that you properly size your position based on the risk you have allocated for your trading plan. Okay. So if you say, you know what, I'm never going to risk more than $200 on a trade, and that's kind of where I keep my intraday trading at, right about $200 risk. So sometimes I'm trading one micro, and sometimes I'm trading 10, depending on what the zone puts into play. Never risking more than a couple $100, right around that range. Okay. So we got that inner zone, which is the fair value gap inside of a leg base group of candles, 43,548. Okay. What is the drop? The cracky, is the drop caused by a technical or fundamental issue? Could you elaborate on that question? Okay, thank you. Oh, the cracky meaning the indexes? Let's see what he says there. Yeah, please ask questions along the way. I'm giving some pretty strong details of this. Okay. The drop was the overnight session and the tariffs going into effect. Okay. There were about 20 countries that did not step up to negotiate some new tariffs. So things sold off right about midnight when all that tariff money comes in. Now, guess who is going to be touting all of the tariff income once he has a good report of it? Okay. So tariff money started coming in. They're putting a lot more pressure on the Fed. The economic reports are coming out pretty bullish. Uh, a drop into a demand zone and a bear trap. This is going to be quite the opportunity. Now, every time that price drops, like you're looking at that strong drop, look at this big red candle right here, big drop in price. And I'm just referencing the Dow. Now, if we look at that range between 44,139 and roughly about 43,975, watch the volume. See, the volume during that time, extremely light. So a lack of buyers or sellers causes price to drop to find them in order to make a market. Okay. So a strong move down or a strong move up is usually a lack of buyers and sellers. Not that there's more sellers here. There was just no buyers. Okay. A different way of looking at the market based off of what the price is telling us. Okay. Now I'm going to get this one set up too, and then we're going to move on to crude oil, natural gas. 43,000. I'm going to come in just a little bit hot on that one. I'm going to come in about 43,570 on that. And the reason I'm coming in just slightly before the proximal line of the fair value gap is simply in observation, price comes within a couple of ticks of that, and people start stepping in front of it. Okay. So we're going to do a little bit of that same thing, 43,570. I don't even think I can get down to 570. Now it may seem, price may not get there, but if it does, I am a willing buyer. There we go. I got 3 micro contracts set up there. And the Russell is the odd cat out. Okay. The Russell versus the daily chart, Globex range is 58 points. Daily ATR at 39 points. The Globex range is very, very wide. We do have an unfilled opening gap, still roughly about that 2150, but I don't have a zone here. Okay. So no setup on the Russell for me to participate. Basically NASDAQ, S&P, and the Dow. Did we cover that? Looking for a long? Okay. And let's see. NASDAQ. Now you can imagine what traders might be thinking. They're seeing all this red on the screen and price breaking the Globex low. They might panic out a little bit. The buyers are sitting right on the other side of this. Now, how did we arrive at these levels for buyers and sellers? We started studying picture perfect past trades. We started looking at trades that we desired to be involved with. We always want to get in at the beginning of a downtrend or beginning of an uptrend. So go and study the left-hand side of the chart in the price area where you desire to make a trade. Okay. What you will start to discover is there's a lot of characteristics over on the left-hand side of the chart that show where banks and institutions have leftover orders. Now, this is not the place to do a lot of teaching. We're here to trade and have some fun here today. Okay. So we have a trade set up on the S&P, NASDAQ, and the Dow, and we also have a counter trend trade set up on the Japanese yen, coming up about 68065 area. And with a counter trend trade, we're only looking for about a 1-to-1 move back down. This is a very strong move up. Traders are just looking for a reason to take a profit as profit arrives at supply. Now, some of our trades have kind of messed up. Swiss franc is in that supply area, and you can see where it's already pulled back. Let's bring that picture up. Now, in all classes and in live trading room, if you're watching us in the live stream, ask questions. Okay. It's okay. If you're asking questions, it shows you have a strong interest in what we're doing. It also says you're one of those educated traders that is looking to expand your knowledge by looking at another way of looking at the price. Okay. But I don't discount anybody's way of looking at the market. I try to understand what they're looking at. And sometimes I'll use that saying, oh, this is where the Fibonacci guys are coming in. And oh, the supply and demand girls are coming in. Okay. You know, when you start seeing that multiple techniques are lining up in the same area with multiple traders, like right now, a big topic is the ICT trading concepts and the fair value gap. That's kind of like the big buzzword out there. So why am I using fair value gap? Why am I using the ICT trading concepts? Okay. It's because a lot of other traders are using them. A lot of the sophisticated traders that are in the prop firms. Okay. And by the way, we do have 3 giveaways from Elite Trader Funding. These are end of day eval accounts. Okay. So let's give away one of those right now to the first person kind of raises their hand. I want it. Just type it in the chat, and then the team will reach out to you to get your contact information to get you that 50,000 end of day drawdown account from Elite Trader Funding. Okay. So jump in there. First one to get it, and team, let me know if the first person that gets it. Okay. All right. We do have the Swiss franc arriving in that supply area. Okay. I'm not ready to take a trade short yet because we're still anticipating the markets to go lower around the open. Wow, we're already 3 minutes closer. Crude oil. Now, Globex range, compared to the daily ATR, we're still kind of in the middle. Now, if we're in the middle range, often the open is a little more choppy, indecisive, okay? Also notice on the daily chart the golden cross. These are big topics, okay? The golden cross is a big buzzword, but if you go back and research the golden cross and everybody gets bullish on it, especially on a daily chart, okay, you notice that price pulls back during that daily with that golden cross, pulls back to the mean and then continues in the direction of the trend, okay? Now, having said that, let's jump out on the exchange traded funds, IWM, Diamond, Qs, and SPY. We have a breakaway gap, okay? A downside breakaway gap. Now, knowing the difference between the gaps, all right, the cracky, okay? Yeah, look for some information from our team. They'll need an email to get you that that code for that $50,000 end of day drawdown from Elite Trader Funding. Now, back to the topics here. With the downside breakaway or an upside breakaway gap, breakaway gaps often fill more than halfway of the gap area. Knowing the different types of the gaps, the three main ones, you have the breakaway, you have the runaway, and you have the exhaustion gap. Okay, now the runaway gap is also referred to as the measuring gap, outlined by by H.M. Gartley in his book, How to Profit in the Markets, talking about different types of gaps. So we're anticipating that after the open, if we get that pullback into our demand zone, we're anticipating that about 50% or greater of these gaps, breakaway gaps, to be filled. Okay. So we're already anticipating an up move based on our studies and what type of gap it is on the exchange traded funds, as well as any other product. If you understand what type of gap it is, then you'll be able to plan accordingly for it. All right. So markets are now just opening. We see that nat gas has come into that supply area and has pulled back. Nat gas has pulled back into the base there. And I'm not quite ready to jump into that. All right, let's go back out to the, okay. Let's see, Apple's earnings came out. We got a nice gap up on Apple. Another odds enhancer, Apple gapping up, NVIDIA gapping down. And that tells us, wait for it. Wait for it, okay? If the market was going to be strong bearish or strong bullish, we would have Apple and NVIDIA, the two largest capitalization weighted stocks on the Dow, S&P, and the NASDAQ. Now, Microsoft is overtaking Apple right now as far as market capitalization, okay? So it's really kind of a cat and mouse. So you could put Apple, Microsoft, and NVIDIA up there and see if all three of them are going in the same direction, okay? And when they're all mixed up, you're going to want to wait. Why is that? The S&P, the NASDAQ, and the Russell are market capitalization weighted indexes. And what that simply means is the large market cap stocks move the index more than the smaller market cap stocks. This is why we monitor all the large market cap stocks that are listed on the Dow 30, S&P 500, and the NASDAQ 100. You'll see we got NVIDIA, Broadcom, Alphabet, Meta, Amazon, Tesla, Microsoft, and Apple. And if you want to add one more, okay, you could put Netflix up there. Okay. Anyways, what we're looking for is all of those to be going up, all of them to be going down when we have a directional market. Okay. Okay, let's see. Here we go. We're breaking the Globex low. We already have our trade set up down there. I'm not trying to short this because it's kind of like reaching for you got a buddy that's got this rubber band stretched like that, and you're reaching out in front of him trying to grab the rubber band, right? Okay, don't do it. Wait for the rubber band to be snapped. And we got that trade set up already. Volume continues to be light as the session opens. 221,000 shares traded on the. Yeah, oh, we got the NQ. Slam. What did we trade on the NQ? Did I put the wrong order in? Appears that my data is a little bit slow. I'm getting a little bit of a bounce, but I think I'm on the wrong side of this thing. Oh, okay. Yeah, I'm going to call that kind of a slop shot. I'm getting out of that one here.
Order
I'll reset that trade up. Got a lot of moving parts right now. Okay, so 22,919. Yeah, come here. 22,920. Get it placed right. Okay. Now we're just kind of waiting for things to come to us. Let's bring up the Dow. Okay, Dow has filled that unfilled opening gap. NASDAQ, we're still waiting for it. And S&P, we're waiting for it. Okay. Crude oil. All right. I'm still trying to push it a little bit more. Right now, we see the Globex range is 6 cents, right? The daily ATR is almost 14 cents. So we're right in the middle. And when the Globex range compared to the daily ATR is in the middle, it's really a choppy condition for that product. So we use that as an odds enhancer to say, yeah, we're going to trade crude oil today because the zone is wide or the zone is narrow. But if the zone is or if the Globex range is in the middle, then we kind of back away from it because it can be very whipsaw and choppy. Okay. No direction until it breaks above a Globex high or breaks below a Globex low. You had a very strong move on gold. Strong move back to the upside when the dollar took a very big drop. Now the dollar has continued to move lower, and also the 10 and the 2-year yield. So not a time yet to jump into the FX markets to trade the inverse of that, unless you have a demand zone down here. But it looks like the dollar is giving back so much of what it built up over the last couple of days. Yeah, we're about 40% back down from the last move up. So we might be getting ready for a bounce, but this looks pretty bearish for the 10 and the 2-year yield and the US dollar. Also notice the volatility index, the VIX, okay? The VIX has gotten high. VIX high, markets dropping. That just simply means VIX is high, time to buy, and so on, okay? Now, the trend is kind of back down in a neutral area, and we don't even have a buy program or a sell program kicking in. So even though we're anxiously awaiting some trade opportunities, our dashboard out here, some market internals, the trend, the tick, advancing issues over declining issues, and the VIX are also giving us signals that says, hey, just wait, everybody's going nuts right now. Okay, they're chasing everything. So we need some of these to align up to show that the NYSE traders or stocks on the NYSE are gaining some ground. Right now, we don't have upticks over downticks. We're a little more downticks than upticks, but not to the extreme. Nice thing about oscillators is that when we get to the extreme areas, we can anticipate a change. Okay. And the trend is an oscillator. Below 60 is time to go, and above 2, time to buy. Okay. The tick NYSE just shows us upticks over downticks on the NYSE. Okay. If there are more downticks, then we'll be on the lower side of this. Getting to that extreme, we're going to look for price to intersect with the demand zone or intersect with the supply zone when we have a buy program versus a sell program. Okay. Advancing issues over declining issues are more on the bearish side. That's good because we need them to be going a little bit lower for us to get our entries down here on the S&P. Now let's talk about the timing of this. Okay. We look for price to intersect with demand zones or supply zones right around the quarter hour. Okay. Not before the quarter hour, and it can be up to about 3 to 5 minutes after the quarter hour. Okay. But we're anticipating if price arrives on time on the quarter hour, top, bottom, top of the hour, bottom of the hour, and the quarters. Okay. If it arrives early, we'll anticipate price to go through it. If it arrives on time, we're going to be ready to participate. Okay. Now, I have shared a ton of information with you today about the trading environment. All of this was derived from our pre-market routine. Indexes, wide range, look for the bull bear trap. Okay, we talked about that. Index dropping, the trend is high, the VIX jumping over 2. Remember the old saying, trend is high, time to buy. Trend is low, time to go. Same with the VIX. Non-farm payrolls numbers were already leaked yesterday. Well, actually, no, they were leaked around the FOMC meeting. Remember, all economic data is referring to last month's numbers. They've been sitting on these numbers for a month. Okay. And now they're ready to release. They just released them. Okay. All economic news goes to the White House at minimum 24 hours in advance. And in this case here, with the employment situation, this was July's number. Sorry, it was June's numbers, not July's number. Okay. And let's see, got that. Futures are derivative. We talked about that. Crude oil, natural gas, kind of in the middle of the daily ATR. Crude oil at 68.50. Let's come back out and look at that one. No, that was natural. hold on. The larger time frame. Crude oil sitting right on that support. We've already tested that support 3 times with demand down about 67.08. Okay. So if you're a breakout trader, you can look to take a breakout below 68.45. Well, thank you, Candlestick. Yeah, it's when you're listening to other YouTubers describe trade opportunities and things like that, I mean, why are you here? Well, you're looking to learn, but you're also looking to see, well, what is this guy actually looking at? Okay. And, what is he really telling you? A lot of people try to hide this information. It does take a lot of time to verify it so you feel comfortable to take risk on a trade. Kind of like right now, you're saying, oh, there was no way that market was going to drop that far down to that demand zone. We're still about 2 minutes away from the first quarter hour. So hopefully it arrives right on time, just as we're describing it. Okay. But you should be in an environment always where the instructor is ready to help you understand things. Okay. Now, there is great detail in what I'm looking at and how we arrived at that, as you can tell by our pre-market routine that we do and post each and every day. We have a set pre-market routine so that the information, what's in the news, our prep screen zones, pre-market tips on various things that we collect and our economic reports and so on. How do you prepare for the trading day? Okay. Oh boy, come on. I hope you're getting this one recorded, Harvey. Good morning, Miss Liz. Always good to have you here. All right. Now, we still have risk on the trade. We're looking to enter right about that 62
Order
area.
filled.
It looks like we got the NASDAQ there first. Okay. Let's come back and get our stop loss at 835. If I should have keep it right around $200. Yeah, it's going to get. Let's see, we're long, so we want to stop out. Yeah, I'm going to have to drop a couple of these off here. Okay, so I got my stop loss in place. Yeah, it means we're taking a little extra risk on that. Okay. But we still have that bear trap, and I'm going to drop a couple of those contracts when I get there. Okay. So you can wait for it to come back out of that. Let's go back to the S&P. And we got a 62.41. Okay. Cash value at 1, 2, 3, 4, 5, 6, 7 Dow stocks up. 17 down. 10 times 2 would be negative 20. And we're about 80 points oversold futures relative to cash. Okay. Oh, come on. Don't miss me. So I got to put an order in over here on the other side. Watching that quarter out. We do have an economic report coming out too, or it did come out.
Order filled.
Woo, there we go.
Order filled.
I'll take that was a quick little $500 off of that. I didn't get filled on the simulated account. Let's go back over to NQ. Any bounce on that? They were coming back up. As soon as we start to go positive on this bounce, I will come back in and take off a couple of contracts. It's taking a little heat right now. Dow's still working its way down. Notice the daily chart on the Dow, right on that 200 simple moving average. Closing below, we're going to see an acceleration down. Okay. But very often, price will trade through the 200 daily moving average and try to close back above. They'll come in and defend that area. So I'm going to bring up the YM. $43.5.
Order filled.
Trying to get an order place here. 5.
Order filled.
Oops. All right, looks like things are slowing down a little bit. I did get stopped out on the NQ, but I'm going to come back in on that in just a moment. We do
Order
it.
filled. Come on, pop up Order
there.
filled.
Remember, size your position based on what your trade plan risk is. Okay.
Filled.
You can certainly copy anybody's trade. I mean, I have no idea what you're doing on that. Okay. But, what you do in your account is all on you. Okay.
Order filled.
I have $200 risk on 5 micros on the mini contract right now. If I am stopped out, then I'll look to re-enter. This is a place I want, this is the bear trap. Okay, this is where I want to enter the trade. But I still have risk on the trade. Okay. Yeah, NASDAQ is taking it in the chin a little bit further. Come on, Dow. All right, what else we got going on here? We've got gold. Let's check our other ones. We got approaching the 10 o'clock reversal. We do have economic reports coming out at 10 o'clock. Now, if you're nervous about price going down still, okay, that's okay to feel that way. You can always capture this if it's going to go back out. Okay. Apple coming down. Okay. Got Tesla leading down too. So much good news out there. Come on, bear trap. Hold it. Little drama down here. The only reason the market stopped going down is there's just simply more buy orders and sell orders at this point. Now, buyers come in two forms, okay, in the market. They come as a short covering from people that were short, and they also come in from banks and institutions that have big buy orders sitting down here. That's why these zones are important to us, and the picture over on the left-hand side of the chart is also important to us. Because that picture is a footprint. Okay. Okay, 4 minutes to the 10 o'clock reversal. NASDAQ is holding the bear trap. But we're still seeing a lot of red on the screen. Only Netflix up. on lower volume. Dow missed us a little bit. That darn 200 moving average. Wait for it though, don't chase it. Got a lot of upside potential. Wait till those tweets start coming out. Yep, market is the individual traders, the fear gauge just went skyrocketing up. Okay, crude coming down. Look at that. Look at that. Nice testimony of the Globex range compared to the daily ATR when we're going to have choppier conditions. Come on down, you can do it. So close. Okay, 1 minute till the 10 o'clock reversal. I don't necessarily trade support and resistance. I guess we do. It is a very vital part. So the question was, do you trade support and resistance? I use it as part of my analysis. Okay. When we have a picture perfect pass trade, support and resistance is part of a way we identify the
Order filled.
outstanding sell orders or buy orders.
Order filled.
Nope, got stopped out of S&P, and I think we are in the Dow right now. 10 o'clock. Let's come back to the S&P. Okay, I'm going to re-engage in the S&P.
Order filled.
Oh, we just got the Japanese yen short. All of our trades that we had set up there.
Order filled.
Getting ready to come in this one here again. I may have to come in a little deeper. Where's our good old Trump tweets at? Get our stop loss in place. Yeah, that's why we always in our trading plan, we have a our stop loss in place. Just looking for where those buyers might step in here. Come on, bear trap. Yeah, we are approaching some fair value gaps down here on the S&P, right at that 62.23 off the daily chart as well. And notice where the daily 50 moving average is at as well. Nice job. Hey, you've been doing pretty good every Friday. You've been coming and picking up some pretty good trades. Glad to have you, Candlestick. All right, let's do another giveaway from Elite Trader Funding. Okay. Get yourself a prop account. Let's see. The next person that can, I'm giving you a plenty warning if you want to get into it. Get ready to type. I don't know. What do we want to do a question on here? Type that I want it again. Okay. I got to get better at these games here. For a $50,000 eval account from Elite Trader Funding.
Order filled.
Come down 240. All right. Good old bear trap.
Order filled.
Yeah, it's finally coming out of that. Took a lot of heat on that, but Dow went, or NASDAQ went way deep on there. And here comes the Dow coming back out. What's that? No adventure's fun without a little danger, right? I'm hoping the danger goes away real quick. Let's start moving back up out of the zone. Yeah, I think everybody's going to need to see a little more commitment for a reversal pattern before jumping in. All right. So we do have one more Elite Trader Funding account to give away. We'll do that here in another few minutes here. The market feels like a little lead weight down here. It's not bouncing up really fast, is it? Japanese yen's working out all right. Just a counter trend trade on that. And I think I'm gonna about ready to grab that one. I'm gonna just take the risk off the trade. Hi, Roger. Always good to have you hang out again. Always remember the good old days teaching in Singapore with you. Are you still down in Singapore? Or are you over in hard to tell. A lot of people move around a lot down here. Let's get the S&P. Rally, rally. All right, let's take a look at the cash value. We got the stocks over here. We have now 19 Dow stocks negative over 94 cents, 4 positive, leaving us with 15. Okay, 15 times 2 would be 30. Cash equals negative 30. Okay, futures are trading at negative 109. So futures are 79 points oversold relative to cash. So if we had 79 points, let's just call it 70 points, that's going to put us at 63, about 63.30 area where we're looking for price to return to. Okay. Where cash and futures will be balanced. Yeah, I'm going to grab that Japanese yen.
Order filled.
NASDAQ getting a good bounce out of that bear trap area. Dow getting a little bit of a move up. We still need to clear a couple of these areas up here. Okay. 200 moving average is an important milestone on that Dow. Okay. Closing below that, we'll be looking for a lot more bearish conditions. Okay. We just traded through it. Yeah, let's see if we can get some lift off. I only have 3 micro contracts on that. Still right around that $200 risk on the trade. And here comes S&P coming around the far outside. We need some help from Apple and NVIDIA for them to both be going in the same direction. Okay. Anybody get into these? Let us know if you're making some money. Again, we're all responsible for our own trading. Of course, I know everybody knows that, right? And when you want to take a profit, anytime is okay. But you might not be able to get back in until another setup appears. So just make sure you understand that the setups are important. A long way to go back up.
Order filled. Order filled.
I took profits on a couple of contracts. How's Russell doing? Russell getting a bounce. Unfilled gap is done. Let's get it off the chart. There we go. Seeing a tick, getting some strong upticks. We still have more declining issues over advancing issues. Whoa. All right, crude oil approaching a demand zone, 67.17 area. It's on a 60-minute. Let's bring that to 67.17. There we go. Now, if you were trading the open range breakout, you got a nice little trade. But much of the volume, much of the interest was looking the other direction on the indexes. Dow's still working. Okay. Now you can take one or two contracts off and let one run as you get more familiar with what we're doing. I've got 5 micros right here. I am going to lock in a little bit of a profit. I'm going to take 2 off. Okay.
Order filled.
Reducing my risk and locking in a little profit. I'm also going to come back down and find my protective stop loss. And I'm going to move it up to where the remaining 3 contracts that I have will be about a $60 risk at this point. Okay. Then we'll just let the rest of them continue to run. Then we'll look for opportunities on a small time frame to add into this. Okay. Ooh, too small. Let's go 5 minutes. We're still not out of the woods yet. We did have a price reversing off of that range. Okay. It did come into a lower zone. We took it off a higher time frame. Now, what we're looking for in this area, and you can use whatever time frame you want, is we're looking to identify a leg base. You know, we're seeing where price changes direction, but we're also going to pay attention to that fair value gap. get the lines colored the way I like them. You'll find that we use many different techniques. We use Fibonacci retracements, many techniques as we explore where many traders are thinking the same thing at the same price levels. Okay. How are we doing with the Dow? Nice job, Callie. Anybody in our live stream that is in a trade, either the Dow or the S&P to the upside?
Order filled.
Yep. The Dow, we haven't quite made the turn yet. See, where other folks are looking at indicators and oscillators to help them confirm an entry, we have forecasted areas, which you saw from our earlier in our session. And as the market starts to turn, I'm going to recognize these little areas. Okay. Because if you don't have a demand zone where price is retracing into, a lot of traders are going to look for opportunity to get in using other techniques. Like they might be waiting for an indicator or an oscillator and so on. Okay. A lot of times when we recognize price making a change, okay, there will be a leg base group of candles. And within that leg base, there'll be a fair value gap area. Nice job, Roger. Get you doing the happy dance this Friday night for you. Yeah, more time to buy a few beers for everybody that's watching you make money. Nice job, Kenneth. Callie, are you still in, Callie? Take a little profit on one or two of the contracts? All right, markets are still kind of shaky right here. Notice Apple's still making a low, and Nvidia is trying to bounce off of it. So we don't have a commitment to the move up just yet. Okay. Even on our 5-minute chart, we're still waiting for a better, stronger potential reversal or a fresh accumulation of orders to be built. Okay. Yeah, that's a lot of clues off the daily chart. And when you're looking for bigger price moves, you need to use the larger time frames. Daily chart is a great reference point, especially when you got big players looking at the golden cross. You're looking at the pullback to the 50 and the 200 moving average in the context of an uptrend. Okay, these are all big signals on a daily chart to kind of look for potential change. Now, the market's going to change direction on the smallest time frame first and then start working its way out to the bigger time frames. But the big time frames are going to tell you where to start looking on the small time frames to start to splice into that. Okay. So we still don't have any commitment to the turn up. Okay. Probably not even any. It takes approximately 5 to 8 bars after a turn in price for the indicator people to show up. Okay. So as we're starting to watch the market turn and we start looking at our positions and whether we want to take the money or not depends all on your trading style. I want to ride this one out because of the daily chart, seeing where everything is at on the daily chart. I feel pretty bullish off of this pullback. Okay. And but I'm going to see a lot of fluctuation on the small time frame. Okay. Until we build a fresh accumulation of orders, or we get some of the indicator folks getting their signal to come in and buy. Okay. So if you go back and look at each pivot high and each pivot low throughout the charts, then you start correlating your indicators that you follow, you will find that your indicator will give you a buy signal approximately 5 to 8 bars after the turn. Okay. Indicators are a great confirmation. They're not always a great place to take a trade. Okay. Because you could be too late. And you always know who's watching those indicators to sell to those willing buyers. Okay. Banks and institutions, right? All right. So we are down to 3 micros on the S&P, and we got 3 micros on the Dow. I've recovered some of my loss on the NASDAQ. We did get stopped out on that one. It overshot my stop loss. Okay, but we're still getting that turn. Okay. Sometimes when you have that strong velocity of a price move, you can overshoot those zones. Okay. All right. So we got one more compliments of Elite Trader funding. We have one more 50,000 evaluation account. Okay. There's also some other competitions going on with Elite Trader funding that you need to check out. A lot of incentives to get yourself set up using their money. Okay. And within a prop account, you can test a lot of these things. So, I was trading in a prop account over on the other side here, and I got stopped out on a couple of trades and I made money on a couple of trades. Okay. Actually doing pretty good on a couple of them. Let's see. But I strongly advise you to get into trading some of these prop accounts. Okay. Once you have passed the evaluation, it doesn't take much to pass an evaluation. You got to make $2,000 on a $50,000 account in a certain number of days. Okay. Without losing more than 2,000. Okay. So look over the rules. So don't quote me on everything, but if you think you can do that, then go and pass the evaluation. Once you pass the evaluation, you get a funded simulated account again, but you start making money off of that. Okay. Now there's a lot of things that we all learn. We all learn in trading the prop account. Okay. How many have ever said, I always make money from trading on the simulator? Okay. Yeah, we do quite well. Okay. But now you're getting a step closer to the still going up. Roger's doing a happy dance. Cracky's doing happy dance. Wow. Which ones did you guys get in? Wow, look at that Dow just rocking. Now, what all of you should be wondering is what the heck was this prep screen zone? When you look over to the left-hand side of the chart, what did that footprint look like to show that there was leftover buy orders? What are those two dotted lines in between? Okay. Why is that area so important? Well, we teach you all of that. Okay. We have a forward-looking technique. We don't use a lot of, we are aware of a lot of indicators and oscillators. Okay. We use them not to get in the trade, but we use them for confirmations, okay? Now, I'm hoping to stay in a couple of these trades with as we downside our position to lock in profits and recover a couple of the smaller losses we had earlier. I want to be able to stay in this trade until we get back up to the 5 p.m. close and even back up to the opposing zones as we also start to see how the cash and the futures start to balance out. Right now, we still have 4 Dow stocks negative or positive over 94 cents, and we have 19. That leaves with 15 times 2. Yeah, cash still equals negative 30. S&P futures are still 65 points oversold. If you add 65 points to 62.80, that's going to put us up at 63.40 right now, where cash and futures are balanced. Okay. Using things outside the price chart as well as timing on the price chart can all help you, and also having a good solid pre-market routine will put you in the right place. All right, we have one more $50,000 eval account to give away, compliments of EliteTraderFunding.com. Okay. Go out to their website, find out what's going on. You can even fight the beast out there. And if you can make more money than the beast, there's a lot of good things that are coming out on that. Okay. There's also some other events from Elite Trader Funding that are coming out soon to show you more incentives to be using a proprietary trading account as you are learning, not be using your money, but using their money to refine your trading plan and put things together. So what are we going to put out there? What are we going to do here? If you made a trade today and you're up on it, post your gains, you write what you have now. Okay, doesn't matter. And we'll choose one of you to receive the $50,000 fund evaluation account. Okay. Now, don't jump out just right away. Put it in there. Put your dollar amount. Okay. And the team will select one and reach out to you. So I need to give you enough time to put it in there. And we'll come up with some better games for sure next week in our live stream. Wow, this is nice. It's rocking. Dow, a little volatile. Okay, see, the Dow needs to recover and get through this this candle right here, because there is a fair value gap there. But that fair value gap is in the wrong place. Okay. So price is going to get bumpy as it goes through this. Once it clears this, then you're going to have you're on to the next one. This one, fair value gap right in here, has already been played. Price broke down, came back into it, found notes. So this one has already been used. Okay. This one is at the level now where if you're a short-term trader, you could take profit. Okay, so if you made a little bit of, if you made some money in the trade and you want that Elite Trader Funding prop account, 50,000 end of day drawdown, please let us know in the chat. I'll hold on for another minute so the team can reach out to you and get your email and get that off to you right away so you can get started right away on it. Okay. How many had a good Friday? Did you learn something? Did we make it a happy Friday? I'm liking it so far. Nice job, Callie. more than lunch money. You got money to party the whole weekend. All right, everybody. Thanks for staying with us on our live stream we do this every Friday. So I invite you back. If we also have a promotion to get our platinum package for all of our live trading sessions and our community trading rooms. Okay. Every Tuesday and every Thursday, we spend a whole day just kind of trading. The mics are open. Anybody can share their chart. Anybody can use the voice, and we can, it's a community of traders where we're looking for trades exactly like this. Monday, Wednesday, Friday, we are trading in our live stream, in our live trading room, just like you're seeing today. Okay. All right. Yeah, thank you for that. Sorry. But anyways, have a great Friday. Thanks for joining us. Special mention, thank you, Elite Trader Funding, for providing us with those eval accounts. And I hope you all take advantage of that. Get signed up right away. Get active right away so you can start making money right away. Have a good day, everybody. Thank you. Thank you, team, for all you're doing there to help us. Bye-bye now.